Happy Monday, traders. It's 8:02 a.m. Chicago time on Monday, the 28th of August, 2023. This is episode number 2525. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's look at what we've got here today. Pretty interesting. We've had a pretty much a kind of sideways going nowhere overnight session. The Asian markets finished quite green. The European markets popped higher on banking and tech. We could see the Euro Stoxx 50 up over 1%, pushing us almost into risk on versus mild risk on. The posture is mild risk on for the session, given the indices. The Nasdaq leading the U.S. up 0.71%. What's on the news? Really relatively quiet. The big piece today was the Chinese actions in their stock market. They've removed or reduced the amount that traders are charged for trading stocks. I think they call it some sort of a stamp or something like that, stamp tax. And they're trying to support interest in their stock markets. They're trying to encourage fund managers to hold on to stock, to equity investments versus selling them. So that it's relatively benign, I guess, by macro analyst standards, but overall that's the big one. Jackson Hole on Friday, the comments from Fed's Powell and ECB's Lagarde. So Fed's Powell's comments were in line with what would have been expected. There wasn't anything surprising there, but we did, despite the fact that I expected the his comments not to really move us that much. They did create a reaction. If you recall, a year ago, there was a ton of volatility, but the conditions a year ago were very, very different than what they are now. We pretty much know where the Fed is currently, and Jerome Powell reiterated those. But some of his comments were quite dovish as well. So the market ripped up, ripped down, then ripped back up. ECB's Lagarde, who was supposed to be the person who'd come in with a surprise, basically held the line and didn't offer much in terms of new color on what the ECB's thinking. The ECB is in a very different position than the Fed. The ECB has a lot to do, whereas the Fed has done a lot to reduce inflation and to shrink their balance sheet. The ECB has that work ahead of them. So that's where the attention was going. But in true ECB fashion, there wasn't much there. Today, I mean, the overnight session, look, economic news, there's not much. I don't want to spend much time on this. The leading economic index out of Japan was relatively weaker versus the prior. It's in line with the forecast. But what's really important this week that we need to pay attention to is there's not much today. You know, there's the Dallas Fed. We have a couple of auctions and the unemployment rate out of Japan. But tomorrow we get the GfK consumer confidence out of Germany, but we also get the JOLTS job openings number. Now remember, some of the principles the Fed is going by is that in order for inflation to go down, the jobless claims would have to rise. I think it's called Phillips curve, something like that. And we're not seeing that. So this is why they're saying we're in these strange, extraordinary, complex kind of conditions here that don't mean anything that any economist has studied. So the JOLTS job openings is relatively important. That comes out at 10 Eastern tomorrow. Then we get the inflation rate out of Germany, pretty important. MBS manufacturing out of China in the evening. And then very, very important for the ECB is the Eurozone inflation rate, which comes out of 5 a.m. Eastern on Thursday. On that day, we get core PCE, which is an important input into the Fed. That evening, Kaikian manufacturing in China. And then Friday, we get the unemployment report. We get the jobs report on Friday. The expectations, 170,000 new jobs created in August, and the unemployment rate holding steady at 3.5%. And then we get ISM manufacturing later that morning at 10. So not much today, relatively steady for the rest of the week, with a lot coming out on Thursday and, of course, the big one on Friday. So that's where it stands. I'm going to skip on over to the S&P. The S&P overnight, again, we would show balance. Complete balance is the auction condition here, but we're showing multiple distribution because it balanced and it broke out on pretty decent volume. We experienced the breakout here in about 20 minutes ago or so, and we pushed volume pretty well, and so now we have 142,000 contracts traded. Before that, it was pretty abysmal. It was pretty poor in terms of interest in the overnight session. I think the Europeans are, the UK is closed today. Can someone confirm that? I believe the UK is not in session today. Let's see. Let's confirm that. Equities. Not seeing it here, but I believe the UK has a bank holiday today, and that's a huge contributor, right? Some of the participation from that group is not present. That's a pretty big group. The S&P is seeing a 99% positive inventory. Inventory is long 99% of the volume, meaning only 1% of the volume traded below the prior close. 22 points of range, most of that basically doubling that in this move that happened about a half hour ago. And the point of control is at 44.21, and I want to remind you that 44.19, where Friday's high was, has pushed through it a little bit, but not high. The settlement of Friday was around that 44.19 MC point of control, and that's where the overnight point of control basically is. We're back into that 44.19 big area, and we've spent most of the overnight session there, and now we've broken out to 36.75 and are trading at 36. The S&P is up almost 22 points so far, so we're gapping higher, and we'll talk about that in a minute. It is Monday. So the rotations have been adjusted, and the rotations, for the most part, have shifted higher. 5.5 points versus about 5 points, or 5.25 points for the S&P, 24.25 for the Nasdaq, 2.9 for the RTY, 36 for the Dow, and 22 ticks for crude are considered the edge of what is normal in terms of rotations on a 1-minute chart going back 20 sessions. That's what we get, and these are all the main sessions only, RTH only. Okay, so we're moving on. Here's what we looked for on Friday. So this is a Friday's Trader Bite. And the main expectation on Friday was that we would likely open, we would likely try to squeeze up a little bit, and then we are very likely to drop. And we were looking for a gap to settle trade that puts us back into the 43.86 settlement price. 85 was the closing price. We're looking for it to push down, and then once that's tagged, boom. We're looking for the overnight low, So That was Friday's plan, key plan. Uh, However, this kind of ECB or Jackson Hole kind of threw a wrench in the whole thing. So let's take a look at that. Here's where we are overall in terms of the auction. So we've had this nice little kind of impulse move down to the low of 43.50. We've had a pullback all the way up to the 68.75, 44.68.75. Recall that 44.65 is key. It pushed through by a couple points, and then on Thursday it opened, tested up, and it exploded to the downside. And what it did, it left us with some poor structures up above in the form of single prints. And what we're doing this morning is cleaning that up. So the overnight session has retraced through the first set of single prints. Remember, single prints will remain on the chart until they're taken in the RTH session, So we need the RTH session to come in here and kind of hammer on those. But what we had is one-time framing up, which was reversed on Thursday. And then we started to initiate, by the end of Friday's session, we started to initiate one-time framing down. So 43.50 was vulnerable as of Friday's close. It looked like this was simply a pullback, a kind of a dead cat bounce. But this morning we're coming in and we're gapping higher. We're gapping higher into 44.36. The expectation is that we would hold this 20 area. And now that we've cleared the 44.30, if you recall, 44.30 was created as a reference last week, right here, okay, 44.30. And we ran through that on Thursday, and we pulled back to it, almost to it. On Friday, we went to 29. I'm looking for 44.30 on this low volume node here, and we are at 36 this morning. So we've migrated from the lower distribution into the next higher distribution, where, again, I'm going to talk about 90, 93 being the key over under in this zone. And then below there is this 65 area. So 30 to 65. So the map is, let's look at this. 90, 93 is the POC in this region, okay, in this upper distribution. 30 is the composite low volume node. This is the cutoff line, okay? 65 is an over under based on price action structure. And then the 19, the 44.19, we don't see it here, but is actually the MC point of control to the downside. And then that distribution goes all the way down to 43.50. 43.50. So 43.50. Now 44.10 actually holds some weight immediately, kind of in the short term. 44.10 based on the action on Friday. 44.19 is acceptance. 44.30 is the neckline, the low volume node, and it becomes the flop up, flop down line. If it flops up, we're looking for 65, and then the real test is 90, 93, the point of control area up here. This is what the price map is. Everything else in between is day structure, day trading type structure. Those prices that I just went through are the main auction kind of lines that are happening. There are stock zones within, in between these, yes, of course, but these are the main kind of, we fell below here, tested here successfully, cannot find buyers, so the next extreme is this, on and on and on. Oh, we pushed through 44.30. We held 44.30 this morning on a pullback, and we're going bid. The open is below us. We're holding the day generated levels. Okay, then I'm looking long. My bias is long. My entry is wanting to be as close to 44.30 as possible. Probably not very close since it's a low volume node. Tough to catch those. As close as possible, and then I'm aiming for 65, and I'm staying the course for 65 with scale outs to cover risk along the way. But my runner is targeting 65, or the main target is 65 in that situation. We fall back through 30. We expect it to kind of waddle its way back through 44.19, gap to settle at 14. Gap to settle at 14, then I'm looking for 44.10. If it holds 44.10, then 30's back on the cards. It's back in the deck, and it could play again. If it doesn't hold 44.10, then we're looking for Friday's low, and then 43.50 below that. Market clearly doesn't have buyers in that situation. You see, so this is the kind of back and forth. And if you have been watching for some time, have been coming to the Trader Bites for some time, and are not grasping the importance of your price map for the day, then you haven't picked up much. Then you're just looking for setups or looking for trades, and you're not paying attention to the most important part, which is I come in as a trader. I have read the market. I've read it in my time frame. I understand what the auction is trying to do, and these are my main personal identified areas, and my job is to watch the market, and based on how it violates or tests and holds those areas, now I am going to take a position with the correct bias in my time frame while defining risk, setting targets, setting runners, and so on and so forth, right? You've got to get those 4 components right. Time is time, so we don't really mention time, but I've got to get my bias, long, short. I've got to get my risk figured out. How much am I risking to find out if the market is, my bias is correct? What are my targets? And so on. So what is my entry? What are my it's really bias, risk. Define risk, define your targets. This gives you your R factor, and your R factor then gives you an idea of where your entry is so that you don't chase. If my risk is kind of going too far out versus my entry versus my target, then I have to pass on the trade, and I'm a disciplined trader, so I'm not going to enter that trade, and it's just a trade that's lost, and I'll deal with the emotions that come with that outside of the market. So that's what you have to get. Bias first, so that's what we cover here in the Trader Bite. Then I'm looking for what am I risking to check to see if the market is willing to pay me for my bias. What are the targets that I'm going to set once I trade in that bias? That gives me my R factor, and then I figure out my entry. Those 4 components must be right. Any of those components being wrong, any one of those will set off a stop or of some kind. You got to get all those 4 correct. Okay, that's why trading is hard. So part of the reason, the random part is what gets most people. So that's the map for this. Let's take a look at what it did on Friday. So here we are. We open. We had a pretty choppy open, which was completely expected. Tests the full session VWAP, pushes back up towards our 19 MC point of control, doesn't quite get it, and then pulls back, and then we rip up on the the Fed chair stuff at 9 o'clock. Fed's chair's comments came out right here. We rip up, rip down, we rip way up, and then push right through and rip down through, and we finally get the gap to settle trade right in here. We extend the IB lower, and we manage to get the overnight low. If you recall, those were the key targets, right? We were looking for the overnight, the gap to settle and the overnight point of control. We got those. We got those tests, and then we come back, we form a collision at the overnight low, hold higher, and then once this is taken, it's now time to monitor for neutral to long. It's set in the neutral mode. At this point, I was done for the day. Neutral mode for most of the session, and it finally rips up and it goes neutral, neutral bias. Now it goes neutral on the day type by poking through the IB high. So this is relatively bullish. It finished in the middle, it finished in the upper end of the zone, and it finished in our magnet area of 44.19. It settled at 14, which is kind of like the slush zone. So here, what we have is a market that's taking off to the upside. We've had a very sideways market in the overnight session, and so we have a very clear over under early at 25, the low volume node there, the breakout point. As long as that holds, I'm looking to trade from the long side. And if I'm looking to trade from the long side, what am I looking for as targets? So what I just mentioned there, by the way, this 44.25 area has the 44.30 above it. The 30 is really important, big picture, RTH level. So any pullback through the 30 is going to be seen as with skepticism. Any push through the 30 puts us in yesterday's or Friday's range. So in that case, we're looking for a gap to settle trade. We're going to watch the 25 below that. If it takes out the 30, it's probably going to take out the 25. But if it holds, then we're looking for the 50 to close the single prints, and then we're back at the 65. We're looking at the 65 right up here as a key target. So that's your primary scenario right there, 65, watching 50 to close the singles, and then 30 becomes the first important area. Ouch, that's really bad writing. And then below there, this kind of weak overnight breakout point. If that doesn't hold, then it's a gap to settle for 10 points below. To the upside, it's 25, and if 65, and if it has a lot of gusto in it, in other words, buyers are coming in really strong, then we may see the market back at 90, but there's a lot in the way here. Okay, so that's that. That's the ES. NQ, pretty much the same thing. NQ also had one-time framing up throughout the week. Then Thursday kind of blew that out. Put in a lower high, lower low. Friday would have been the pivot to establish one-time framing down. So today, if it opened down here and finished with a lower high, we would have one-time framing down. We'd be looking to test that 14,600 area. But what we're doing today is we're gapping up. We're taking out Friday's high, which is important. By the way, Friday, the Nasdaq didn't go neutral on the day. The ES did. The ES exhibiting relatively stronger interest there. And then you have these single prints all the way up into this like 15, 184, 185, and that becomes a key target today. So this morning, I'm looking for, again, the 15,050 as the key over under for the NQ 050, and I'm looking for the 185. I'm just rounding. 185 is the first key target. If it pushes through, then you're looking for 250 beyond there, and then 350 above that. That's basically the price map for the NQ. So if we fall back into range, things will be very interesting. Otherwise, we're likely to grind up, and we have weak structures above in the NQ. A quick run through crude. So crude had this kind of push through, if you recall, the important area that we wanted we were looking for a test on is the 78.50. It opened 2 days in a row in the 78.50 and pushed higher and finished higher. And so on Friday, it actually dipped back into this 78.50 area and finished even higher, and it came basically back into this MC point of control this morning. a quick test of the MC point of control. I'm expecting the 79.25 to hold support here. 79.50 becomes the first price. So I'm going to put 950 here. Man, I can't write today. It's really terrible. 70, ugh, 950, okay, and 79.25 as like the zone that I expect support to come in. Otherwise, we're likely to retest this important area where we opened last week a couple times. Okay, so that's crude for you. Hopefully you're picking something up every single time you're here and are feeling more and more support towards what you're doing as a trader, and then we'll catch you and then applying that within your own personal way of looking at the market. I'll catch you tomorrow morning. Take care.